Mhm.
some resources here. I think that's really important to me. And sometimes, even though we may have people online, they may have the same questions.
Right.
And they may be in a similar
Or
situation.
sometimes other people think of questions I wouldn't think to ask, and I'm glad that they did.
Exactly.
And, or they could be in a similar situation and relate to what your situation is. And so, let me see here.
Okay,
We have
I'm going
more
to
than one
start
piece of
recording
paper.
on this.
Can I have seconds on the piece?
Oh, you do that, please.
Yes,
Of course, CJ.
absolutely.
Recording in progress.
That's what I mean.
Yeah.
Okay.
Have a pizza. And thanks for being here, TJ.
Oh, no, I appreciate you inviting me.
And we might be expecting one other person in
I might learn
person.
something.
And we have YouTube going and we have Zoom going. So I'm going to be posting it back to YouTube Live so people can rewatch it. So if you want to rewatch it, you can go to my YouTube and rewatch this whole thing.
Are you doing all of this right now?
I'm doing it right now. We've been live for a minute. So fun, right? And then we got it on Zoom and I'm recording on Zoom so I can share with people on Zoom. So, and I just got to, I guess, make sure I don't need to add anyone. So thank you. We're gonna go through this. We have a little outline. Go ahead and eat. But I'm Bridget, of course. So thank you for being here for the free home buyer workshop. And we love what we do. So I was a dental assistant previously. Got into real estate 7 years ago. Got my broker license 2024. So I've had my broker license for a year. Thank you.
Fantastic, not easy to do.
Can't even believe how long it's been, honestly.
I'm
Someone said,
impressed.
how long have you been in real estate? It's been like 9 years,
Wow.
but the first 3 years I was doing dental. So,
Wow.
and what I love about this job is I get to help people and help them solve problems. And that's very fulfilling to help them solve the problems in the real estate world. I have the education to help and the willpower to help. So I love to do that. So I love that part about it. So Christine, tell us a little bit about you.
And well, first of all, I just want to comment that you're just so fantastic with working with people and just an absolute pleasure, Bridget. So
Thanks.
thank you for the opportunity to include me this evening. I appreciate being here. But I'm Christine Joyner. I work at Cross Country Mortgage. My background a little bit is I've always been in the finance industry. I've been most of my career has been in banking and management. Lending has been a small part of my background, but in 2019, I finally went out on my own as an independent mortgage lender and just really wanted to be able to serve clients. And I've always helped with different types of loans, not just residential, but everything from auto to car to, well, you name it. I even had somebody borrow money to get an electric bike one time.
I love that.
And then in addition to that, I have more diversity. I'm not your average lender because I've worked with things as, like helping people with their future investments, just planning and just bringing a little bit more to the table. But lending has been something I've always enjoyed because there's nothing more fantastic than helping somebody achieve that dream of being able to buy a home. And it just fills my heart. So I kind of went there and that's where I'm at today. And so I love to incorporate everything and guide clients and people through the process.
Cool.
So, yeah.
So yeah, let's get started with like the beginning then. Like Christine's gonna talk about a little bit about loan options and she has a beautiful slide. So I'm gonna give her some time to go over this because I really want to utilize her knowledge tonight. So ask questions and
feel free to interrupt me with where I should slow down or what I should add to it or any questions you have. And please feel free to interrupt because I am the kind of person that not only enjoys doing this, but I really do enjoy just making sure people have a clear understanding. And I'm also one that all questions are welcome. You should never be uncomfortable to ask a question to have a clear understanding of the entire process. So one of the biggest things is, you want to start, you're in the right spot. So this is really important, is getting the first information on how to qualify for a home loan. So unless you have all the resources in the world and you have a ton of money, and you may still want a loan, because because cash is king and you want to keep as much in savings as possible. But so a loan is a really big part of buying a home. And I want to make sure that people have a clear understanding. So this is my little loan team here in Eureka, and then I have additional people that support us to get the loans through. So we want to make sure that we're just addressing a few things. So I have a few highlights: renting versus owning, the bonus of buying, assessing your plan, making sure you're in the right spot and how you're feeling about it, and financially, are you ready? And what steps do you need to take to get ready? So we'll just kind of go through these slides real quick to give us, but please feel free to interrupt. So buying a home, there's a lot of advantages to buying a home compared to renting. And it's really hard to determine, are you ready? And one of the biggest things is, depending on what you qualify tax-wise, you could have a tax advantage from owning real estate. Real estate's a really important feature on estate planning and planning for your future. And also, a lot of people use real estate as a way to have additional write-offs to be able to lower their tax bracket. So some people are looking at investment properties, and maybe just depending on where you're at with your financial situation. It's also a great way. I like to think of when you buy a house, it's a forced savings plan, right? So every single month you're making a payment. Yes, you do pay interest, but you're also chiseling down on the balance. So you are building wealth with real estate. And when you become a homeowner, not only does the house have the potential to appreciate, and right now our average in Humboldt County is about 4 to 5%, which is a really stable interest rate without a ton of fluctuations, and that's taking in ups and downs. So not only that, but you got to remember, when you buy a house, it's your house. You get to paint the walls whatever color you want. You can have the animals. You could do whatever you want. It's your pride and joy. So I always like to ask my clients, like, where are you at right now? Like, what is your feeling about, buying a home? What is your goal around buying a home? And that's something you kind of want to ask yourself. Like, we call it, what is your why, and why are we doing this? And what's the purpose? Another question I like to ask, and you should ask yourself too, when you buy a house, I look at purchasing real estate as a long-term commitment. It's not something that you're going to flip, like you could sell stock pretty quickly, but buying a house is the long game. And I often ask, like, how long are you going to be here? How long do you think you're going to hold on to this home? Because it'll help a lender determine, and it'll help make sense. Like, do you think you're going to live in the house for at least 5 years? If not, are you going to plan on making an investment property? Because the markets do fluctuate, and we want to make sure that you're prepared for any fluctuations that can happen in the real estate market. And it's really important to make sure you have a team surrounding you that's going to really help you with the process. So having somebody that's not just, that's really looking at your future and making sure it makes sense to you, and then partnering with a great real estate agent to make sure you're finding the right house for your situation.
Yes, exactly.
Okay, so what are lenders interested in learning? So there's a few things we look at as a lender. So one is, we want to make sure that and we have to have these general things that we weigh to determine if you're what we consider credit worthy. And that sounds like a terrible thing, but it is true, because you're going to be borrowing a large sum of money. So we want to make sure you're going to be stable and financially secure, that we can feel comfortable lending out this money, that they're going to receive the payment back. Lenders are not in the business to foreclose. Even though lenders put a lien on the property stating that you have a loan on it, and if you were to default or go into anything, they don't want the property. They're not in the business to sell real estate. They're in the business to make interest off the monthly payments. So we look at your credit score, and we always want to kind of gauge, and it's really important to have resources of how do you find your credit score? And I can help you with that at another time. If you have questions around what is my credit score and how can I improve my credit score, I always give my clients that information. It just comes automatic when they work with me. And how much does this cost? So it's really important to know how much is your payment going to be, and what are you currently paying, and are you going to be comfortable? It's really important to make sure your lender is giving you that information, because if they're like, you're pre-approved, congratulations, you're pre-approved, that doesn't give you a solid figure. We want to make sure that you know that your monthly payment, and I often like to ask my clients, what monthly payment are you comfortable with? Because I need to make sure it's within your range. And so right now, payments are averaging on a house around $325,000. You're looking at a payment in the low $2,000 range. And then we also want to look at cash. How much do you have saved? Because the more you have towards putting a payment down, now you don't need to, because we have things that are called down payment assistance, but the more you have saved, the easier this becomes, and the more room you have to negotiate, and the stronger buyer you are. So bringing in a little bit of savings is always a plus. We can still do it. I've helped many clients buy homes without any funds, but at the same time, you have to remember you're doing about 100% financing. Are you comfortable? So savings is a really important thing that we want to look in how much are you investing of your own funds. Income is another really important thing for us to look at. We want to make sure that you have a solid income that's going to be ongoing for a minimum of 3 years to make sure that we're comfortable lending for 30 years, or some loans are up to 40 years. So be prepared for that. And then we want to make sure your ratios. We don't want to put you in a financial hardship that is going to, your mortgage payment is more than you can afford. So we call it a debt to income ratio. So we look at your monthly income versus how much you're spending plus that mortgage payment. So it's called debt to income. And we have factors that we pay attention to make sure that you are sustaining a comfortable lifestyle, and that us as a lender are comfortable with where you're at financially. Any questions about that?
What if you don't have a credit score?
That's okay. That's
Is
a
it
good
possible to
question.
get- Is it possible to get a loan if you don't have
It
one?
depends on, we can do things called alternative credit. You will have your interest rate will be affected by it. So if you know, and my question to a client that's coming in with no credit score is, I generally ask, well, how soon do you think you want to buy a house? Because I'll also give you ways on how to start building credit quickly that report to all 3 credit bureaus to help you establish that credit score. So the higher the credit score, the better the interest rate. With the better the interest rate, the lower the monthly payments, right? So we do have the ability to use alternative credit, but it's not, you'll pay for that in the rate a little bit. So we will look at other criteria.
If you were buying, say, an investment property or a house to rent, can you count that rental income as part of the payment?
Okay, that's a good question. So if you were to buy it, so would this be your first home? So then I'd come back, so if you were to buy it would you be living in this house?
No.
Okay.
I'd be renting it out.
So it could be challenging. So to buy an investment property is a whole nother can of worms.
Okay.
So
Maybe we don't want to get into
it's investment property is fantastic. Just know that you can buy an investment property with as little as 15% down. However, you're going to get hit heavily with fees and a higher interest rate. So usually the sweet spot on an investment property is having at least 25% down or more to qualify for the best rates and to make it cost effective. So first of all, we want to make sure you have 25%. It can't be borrowed. It can't be gifted because it's an investment property. And then secondly, if you do buy an investment property, we can use that potential rental income to help you qualify. That is correct. But there's also criteria around it. We're going to wonder why you're buying your first house as an investment property versus your primary residence. So you're going to have to document that you have a housing expense. We're going to want to look at 12 months worth of rent to make sure you're making. Yeah. So stuff like that. Just those are the items. But yeah, it's doable, but there's a little bit more that goes with it. Good question though. Okay, so credit score. We look at credit scores, and if anybody ever needs help on how to get started on building credit or repairing credit, I help my clients that are working with me on ways to improve credit scores, and we do have tiering. So interest rates are based on tiering. The higher the credit score, over 740 and even over 780 gets a better pricing. And if you're on the cusp, so let's just say you're at 730 or like, I would say like 739 to get to 740, I would see what we need to do to improve your credit score to get to the other. And I can do something to rescore you without any cost to you to help you get that better pricing, and we would work closely together. One of my favorite resources is annualcreditreport.com. I always encourage my clients quarterly to pull one of their credit scores, or not their credit scores, don't pay for the credit score, but look at your credit report to make sure that look for errors. I think my next
What'd you say it was?
Annualcreditreport.com.
Okay. Is that better than just looking on,
Like your
Karma or
Yes,
something?
actually, that's a great question, Bridget. Yes, and the reason I love Credit Karma. I love the credit score that I get from my bank and the credit scoring that I get from my credit card companies, because it's a great way to monitor. Just know that there's a whole bunch of different credit score models out there. We use something in the mortgage world called a mortgage FICO. There's something like an auto FICO. There's credit card FICO. So there's a bunch of different, and then what they use on Credit Karma or your credit card is an Advantage credit score, totally different. It's created by the credit bureaus, but it can vary. So like when you go into a home loan lender and they pull a credit score and I say, your credit score is 730, and they're like, wait, it was so-and-so on my Credit Karma. It's because it's a different model. So we look at different models so you can see variations. So, but it's a great way to monitor, look at your credit score, to monitor. So if your credit score dipped down, but you haven't applied for anything, you haven't done anything, that's a red flag to check your credit report at annualcreditreport.com, because you want to make sure nobody's using your credit and there wasn't something fraudulent or you missed a payment that you weren't aware of. So I highly recommend at least once a year, 3 times a year, going to annualcreditreport.com. And in addition to that, a really important tip that we like to give is check for mistakes. Because, oops, I missed that slide's missing. But you want to check for mistakes on your credit report, because you could fix things that you weren't even aware of that weren't there. Sometimes you see family members' credit history. I've had this before where son and fathers had the same name, but their credit reports got blended. So you got to go and clean that up. Or there's another, if you have a very common name, things can get crossed over. So you want to make sure that there's no mistakes, or that the lender hasn't made a mistake and reported something on your credit report that shouldn't be there. Okay, so we like to take a look at your survival, like how much is your living expenses, and this is just for your own reference, and I can email a flyer that does this for you, where you want to break out your monthly expenses just so you know what you're really spending your money on. It's super important to audit your statements. Take a statement from your whatever credit cards you're using, look at your bank statements and look at the little tiny things that are coming out. It's also really important to go into your iPhone settings or your settings and see how many reoccurring little bills keep tapping you for $3.99 that you don't care about, but add up. So we want to remove those things. It's really important to maybe once a year, twice a year, audit your financials to make sure that you're not wasting money on little tiny silly things. I personally do it on a regular basis. Highly recommend everybody does it, because how often do you sign up for something and they just nickel and dime you and you don't even notice or care?
Yeah, those subscriptions.
Yes. Okay, as far as programs, a lot of loan programs out there. And down payment, there's a lot of programs. You can go as little as 0% down with down payment assistance. I do a ton of down payment assistance programs on locally and throughout the state. So I if people are short funds, we have options for you, but you do not need 20% down. On a conventional loan, you can go as low as 3% down. I can also get a 3% down payment assistance to support that, so that you don't have to come in with the down payment. Closing costs are something else that we need to look at. That's in addition to the down payment. But loan amounts can go all the way up to 832. Government loans, you can go as little as 0 to 3.5% down. Loan amounts, depending on the program, do vary. I'm a big fan of government loans. I think they're a great match for Humboldt County. I think a lot of people fit in their programs. The interest rates are fantastic. Mortgage insurance on an FHA is very reasonable today. And I think it's a great way to help people get into their first home. And I do think we should be more open-minded on looking at those products because I think we'll have more people being able to afford homes. Jumbo, we don't see in our area. We do have an area and an appetite for them, but we have a lot of programs that we can help clients with. And then in addition to that, I don't have it on this particular sheet, there's more loans than just these conventional type. We have something called a non-qualified mortgage, like a bank statement loan, or items for self-employed people that are not documenting.
So if someone has a job like the restaurant server, they get tips. What's the best loan option for that person?
Well, I want to look at their income, right? So
Okay.
I'm going to look at the whole package. So when somebody comes in, I'll gather that information
Okay.
and then I'm going to evaluate what their income is and down payment, credit score to deter. And then that's where the art comes into what I do for a living, because then we're going to make like, hey, based on your current situation, this is what I recommend. So typically somebody that has tip income, I'm going to start with your conventional type of loan or government type of loan.
And just talk to them. And see
And
what-
as long as there is, I mean, a bank statement loan, I don't know if that would make sense in that situation.
You would just have to see what their situation was.
Yeah, and how they're paid and the
Okay.
details around that. Closing costs, in addition to the down payment, we need to figure out how to come up with about 2 to 5% of the purchase price to determine your closing fees in addition to your down payment. So I want to make sure people are aware that it's not just the down payment, there's also closing fees. It's like buying a car. I use that as an example. You know, when you buy a car and you go to the dealership and there's the sticker price, and then after all the tax and registration and all of that, buying a house is the same thing, but we're buying something much larger and those fees.
Yeah, but there's no registration on a house. I know you have to do like title insurance and things like that.
That's exactly correct. Yeah. So it's not DMV. It's going to be,
Right.
but it's very similar. So the process is it's just that there's cost associated with the transfer of an asset. And that's what we're doing.
And some manufactured homes can be considered that.
That would be more of the mobile because that's more of a personal property thing.
Like in a mobile home in a park
Yeah.
type of thing, unless they put it on the tax roll.
Exactly.
Right.
Which you see more of it. I think it's older when it was a DMV.
Okay,
Like,
and
yeah.
once you put on the tax roll, you cannot go back.
And
Right.
I don't know if you necessarily want to.
Oh,
Yeah.
okay.
But I don't know. Mobile homes in a park is a total different, because we look at it more of a personal property than residential.
Okay.
So it's a total different
Right,
product.
they actually have DMV fees.
Yeah, they can.
Mhm.
They can, especially some of the older ones. You'll
The
see
older
that.
ones.
Yeah, you'll see that with the older ones. And let's see here. So that's pretty much in some. These are just kind of going into a few. What do we look at in a monthly payment? Obviously, your principal, your interest, taxes, property taxes are required by your county, and they can vary depending on the county. Where is that going? What did I miss?
It's funny. I don't know.
I had something really weird. I must have been scrolling or something.
That was funny. It was just zooming.
So yeah,
Appropriate for a Zoom.
yeah, and then you're also required to have homeowners insurance on a house because we want to make sure the house doesn't catch on fire. And we always help our clients with getting quotes from different agents and stuff too.
And that's the
Yeah.
other thing I've heard is it's harder and harder to get insurance in California, maybe, and especially
Yeah.
if you're living in a forest or something.
Yeah,
like
if you have a
that.
lot of trees in the area, and the insurance companies are now asking the age of the roof on a very regular basis.
Yes,
They're going out and doing inspections before they finalize it. So insurance is in California, and probably it's going to become nationwide because California has a lot of claims. But right now in California, it is definitely more challenging. We're lucky because it's not as, we're not as high of a fire zone in some of our areas. So we still have, in my opinion, very reasonable rates. And I think I've never had a purchase decline due to not being able to get insurance. We've been able to do something. So I feel very fortunate that we haven't run into that.
wow.
I had one.
Did you? Where was it
years ago.
located? Where was it located?
It was in Jacoby Creek.
What?
It was just it's just a forest. But it was a couple years ago. I think the insurance stuff has gotten a little bit better.
And you
Maybe
shop
worse. I don't know.
several, you shop several agents?
Yeah, it was gonna be like $5,000 or something. I don't remember, but it was too much for them.
Oh, it
With
was
the
too much
purchase
for your, okay, I think I remember that.
For my
do-
client.
I do
yeah.
think I think I remember.
So I've only had it happen once. Most every other time it's fine.
But
you
they
know?
could get insurance, they just didn't want to spend the extra, so the
It
house was able to be insured.
Yeah, but it was just gonna be like a
Okay.
crazy amount.
Yes,
Yeah,
that, I'm
so-
not gonna decline that at all, so if somebody chooses not to, that makes sense, yeah.
But yeah, you just gotta shop around. I haven't had any other problems.
Yeah. Okay, so I'm kind of gonna, I don't, yeah. So any particular questions? I do have, what the things that we're gonna ask for as a lender, when you set up an appointment to start the process, is we're gonna wanna look at 30 days, if you're a W-2 income earner, 30 days worth of pay stubs, last 2 years W-2s. And I usually like to look at a bank statement to make sure that your funds are seasoned and you have enough funds for the closing cost down payment or whatever you quote. And we will do a credit check, typically a soft credit pull, depending on the circumstances. If I have to do a hard credit pull, I will check in with you for whatever reason, and you will know why I have to do that. Let me see here. Once you do that and we evaluate your situation, we prepare that pre-approval, get you an estimated fees so you know what it looks like. We'll go over those details with you and answer any questions you may have. And then at that point, you are ready to go and make an offer on a house and work with your realtor to get started. So,
Yeah, I guess I can go over just a little
any
bit what that looks like.
questions, like as far as?
There was a few questions. How many people can be on one loan?
As many as needed, yeah.
As many as needed?
Yeah.
Oh, okay. How long does it take to get an appointment with you?
I mean, I'm usually, it depends on the day, of course, but like if I had somebody that needed to meet with me tomorrow, I do have availability.
Okay.
So usually,
You can meet with them like that same week, probably.
that's typically the same week, or if not, like the following week, depending on like if I have conflicts that they can't squeeze into my schedule. But then we have a great online portal, so if somebody had an emergency or for whatever reason.
Saw the house that they needed that night
I
and
have
needed to
a-
make an offer.
Yeah, I have a portal that's easy to do, an online application, super intuitive, very easy to use. And then I have a whole team. So if I can't get to it right away, I have 3 or 4 other people that can help evaluate the income so we can get that pre-approval out right away.
Perfect. And one other question that we had previously, I asked a few people questions.
I love it.
And they wanted to know, what should a first-time home buyer do before meeting with a loan officer or a real estate broker? So what do
In
you
my opinion,
think?
nothing. You can come in with absolutely nothing. I have an open door type of policy where you come in, you ask me questions. We're going to just have a dialogue. It's going to be very comfortable. I want to get to know you, and I want to make it as comfortable as possible. You can just walk right in. And I mean, I take people that will not come in our office all the time and bring them to my desk. And it's just about, I will gain information by chatting with you to be able to then compile a checklist for us to come back or get started.
Right.
But you don't need anything to
That's a
chat
good
with me.
answer.
I mean, that's my.
I love that.
That's hard.
That was a hard one because
because
I'm like, well, basically nothing.
Nothing.
You just call us and we meet and then we just start the journey. Don't feel like you have to have so much savings or your credit score has to be over a certain amount. It's
as a matter,
just meet with us. That makes our day when you call us to meet with us. So, and we're happy to do it, but you don't need anything like that. Don't set an expectation for yourself going into it. Just go and chat and
actually,
learn.
you bring up a good point. I have a lot of people who are like, well, I want to pay off this credit card before I do anything. Well, sometimes it might be better off putting some additional funds in a savings account. And if you don't buy a house, you will have that savings ready to pay that credit card off. So it just depends on your situation. So I always recommend chat with a professional right away, because they'll probably give you some things or angles that you haven't reviewed or didn't think about to help guide you through that process. So
Yeah, and also just doesn't matter who you go to, just go to someone who you trust, So if you trust a local lender, a local realtor is your friend, go to them and they'll help you out. So just start by reaching out to someone who you trust, I would say. So thank you, Christine.
you're welcome.
I just wanted to go over, the steps. So we talked about making an offer, looking at homes before we look at homes. we got a guest here. I've looked at homes with you before, and you're familiar with this form because this is a form that we now have to go over and sign before we
Yes.
view houses. And it goes over basically the relationship that we have as a buyer agent to the buyer. So I think it brings a lot of clarity to what we do and a transparency as well for the whole
Plus, it
process.
defines everything in writing as to what the relationship is right up front.
You like that?
I like that.
Good. Yeah, so that, I definitely like it too. So it's the buyer broker agreement. I gave TJ the short form. It's a 3-page one, but the long page is 14 pages. It's disclosures and it goes all over everything. So if you're just gonna see 3 houses with an agent, you can start with the property showing form. And what is it called again? It's called the
title of it, I can't. You took it away.
the PSRA, the Property Showing and Representation Agreement.
Oh, okay.
And so that's a short one that I printed out here, and it's just for 3 houses. But if you're going to be looking at more than 3 houses, I would just say let's go to the BRBC, which is the Buyer Broker Agreement. It's a 30-day maximum agreement that you have with that agent. So or 3 months. So after 3 months, you have to sign a new one, or you guys can cancel each other. So you guys decide then. And so what it does, it protects the buyer. This agreement protects the buyer. It lays out clear expectations, and it outlines the representation and the responsibilities of both people. It goes over compensation too. So a lot of people don't know how real estate agents get paid, and we get paid after the buyer gets their keys. So the transaction closes. Typically, then I'll give the buyer the keys and a closing gift, and then I'll get a paycheck delivered to my office, maybe the next day or whenever. And so that's how we get paid. We get paid at the close of escrow. It's important to know because during the whole process of looking, we aren't getting paid, but that's just why we do what we do. We love it. So we don't get paid by the hour though. But sometimes people feel like they don't want to call us either for that reason. But like we are entrepreneurs, so we want to show homes, we want to answer questions and get you guys into property. So the buyer broker agreement is something that we'll go over before we look at houses. And yeah, TJ, you've seen it, but
Yes.
yeah, and you liked it because it brought a lot of clarity. And then you can read it at night
I
too.
liked it because it protected you also.
Yeah, it does. Yeah, it does. So the first page is
And it kind of keep flaky people from just calling anybody to go look at a house just because they want to look at it.
yeah, it really just lays out all of that, right?
Okay.
It's changed. So the first page is about the relationship, agency relationships and how we represent each other, or how we represent clients actually. So in this case, today we're talking about buyers. So I would be a buyer representation to whoever wanted me to. And then it goes over civil codes. And then I was just talking about how it goes over the properties and it goes over the amount of compensation and all these other terms. So if you want a copy or you're ready to see houses, let us know. TJ, do you have any questions about this form? I mean, we went over it pretty good when we saw houses.
No, you were very thorough.
I know, I like that. So yeah, we are very thorough when we go over forms. I went over an offer for like an hour or two with a client, and we sent it in. That one didn't get accepted, but that's okay. But it takes time to, answer questions and stuff. I want to go over one like buyer scenario I actually did with Christine, and it was a first-time home buyer, and they were getting an eviction or like a 60-day notice from their landlord, and so they were really kind of crunched on time to find a house. They were ready. I think financially they got approved, but mentally I don't think they were quite ready because it was like kind of like all of a sudden. So sometimes life forces you to do things. In real estate, life, things happen, where you have to sell, you have to buy. And this was one of those cases. So that we ended up looking at properties. We were just like hustling, looking at all these properties. And we found one, and it was marketed as a cash only sale. And we got the seller to accept a financed offer with Christine and my clients. And we went into that transaction. It was kind of a fixer-upper. And so my buyers went in, they had to do work to get the loan. And so we went in with a handyman and we did a bunch of work to the property with the buyer, first-time home buyer. So I went there every day at like 8 a.m. for 2 weeks, let the handyman in, supervised everything, made sure everything was going good. And it wasn't, I think it was like 30 days later, the buyers got the keys to their house, and it was about 2 days before they were supposed to give the keys to their landlord. So the timing was just perfect, but it just that right in that transaction, we had the best team. Christine was nailing it on her end on the loan side. She had me, the real estate broker, like hands-on at the property doing what we needed to do. And then the buyers were just on top of it too. So they had good communication, and that's huge. Okay, yeah. I mean, it was cool. So they ended up making an offer on a cash-only transaction, and we got a loan. It was just so cool, and they live there today. Yeah, I just love it. They live there. I drive by their house. I'm just like, this is so cool. Yeah, and so like anything is possible, basically. And that was a really just not a plain and simple transaction. Most of them aren't plain and simple, and that's why you got to have like a good team because you want someone that in the challenges really jumps over their hurdles and gets stuff done for you. That doesn't run away from the challenges, because you need to get over those if you want the keys sometimes.
No, that sounds like you really
yeah,
to be flexible.
It was a good one, right? That was a good story. So like I wanted to share that story tonight.
Especially on a cash only deal.
Yeah. And the agent, it helps to have that agent trust, because that agent trusted me that I would take care of it and make sure everything went smooth, and it did. So that's really awesome. But yeah, so strategies are very important, and working with the right people, right? So come up here again and say goodbye to everyone on the screens.
Oh, yeah. Did you want to go over like escrow, what escrow does?
Oh yeah.
Because that's also really important. So there's 3. Yeah.
When I first started, I said, I asked my real estate broker, who's escrow? Like, who's this person escrow?
Well, people, and the reason I bring that up, because I have people who get my team confused with the escrow team. And so there's something called an earnest money. So when you make an offer and you're intending and you have an accepted contract, so the seller wants to make sure you're serious about this purchase, right? Because they're going to take this asset off the market. And so you have to put something down called an earnest money deposit. Mm-hmm. And I don't know what that percentage is typically. It's
1 to 3% of the
okay, 1 to 3%, because that's
depending on what they want to offer.
And you make that deposit to the entity called the escrow department, or the escrow company. Mm-hmm. And so the escrow company is really, so you're going to have 3 entities. You're going to have your real estate agent who's going to really help you make sure this is the house that you want and that it's sound. You're going to have your financing if you need a loan to help you with the funds so you can buy the house. And then we need the escrow company that's kind of a third party neutral entity that they work with to escrow title, and they will make sure that the title is clean, because you don't want to buy a house that some great aunt has a deed that has been unrecorded coming in claiming it, and you don't want to buy the house that the current owner has unpaid debt associated on it alone. Mm-hmm. So we need to make sure that the title is nice and clean for you, and that those debts are going to be taken care of, and the escrow company handles that, and they get a copy of the purchase contract, and there are checks and balances. So the lender and the escrow company are going to make sure that we're following the contract written by your realtor, and that everything in that oh my gosh, I forgot about that. I didn't want to make noise when I was over there and that thing. So we want to make sure that they're a third-party company that makes sure we're following the contract, mm-hmm. and that we're doing checks and balances.
Right.
But that's the third entity that's going to help you. So you got the realtor, the lender, and the escrow mm-hmm. team that's going to guide you through this. We've all been doing this for a very long time, and we're going to make sure that you're buying the right house and you're in the right program with the best interest rate possible, so that you can achieve your dreams.
Exactly. Like someone told me, like title companies kind of like, they're the third party people, but they transfer the key, like the title to the buyer and the money to the seller. And so it's like that safe transaction. And they also have a fiduciary duty to both the buyer and the seller, which is important to know because they can't favor one party over the other. It's based on the contract that they receive, and they have that fiduciary duty to both of those people. So I think that's.
I like to think of them
That's
as neutral, like they're really.
They are
on
neutral.
both
They're like
sides. Yeah.
they follow the contracts,
Yeah.
but they can't just take one person's word for it. It has to be written and signed, you know.
Yeah.
And so it's just a good team, you know.
And they provide title insurance.
Mhm.
So like, it's really important, like an owner's title policy is considered optional. However, it's really important that that insurance is there so that if some unclaimed property or something comes back, the title company and the escrow company will take responsibility for that. So it's really important to pay attention. And then we also have the homeowner's insurance. That's going to be another entity. So there's a lot of professionals that help people buy
So much info. Okay, do you have any final questions?
It's kind of a dumb one.
I don't think so.
See, that's one thing you should
Some
never.
of us are so old, they won't want to loan us money for 30 years because we may not be around that long.
That's a great question.
And, I would be in a position where I'd want to buy something to pass on to my children or pass on to my heirs, even if they're not my children. And I would be leery as a lender because now this guy's going to pay maybe for 5 years and he dies, and now it's taken over by somebody who maybe can't make the payments.
No, there's fair lending laws, right? So in the United States, and this is in the United States, is people don't realize what a luxury is. If you actually do any research, we have the 30-year mortgage. There's no age discrimination. So I one time, and I don't know if this is true or not, or today, but I had somebody tell me in another country that if you were over 50, you could only do a 15-year term. But not all countries even have the 30-year mortgage. We have to understand this is really kind of a newer, like history-wise, program that is very much of a luxury to make it affordable for people to be able to buy a home. I know this is talk about the 50-year mortgage,
I know
which
we're
is,
talking about longer period.
So
which I don't know how I feel about
it
that.
doesn't matter.
But no, there's no discrimination against age. It doesn't matter how old or young you are. You can always apply for a home. I mean, you have to be 18 at least because you need to be able to sign a contract legally. So that would be the only thing I can think of. And I've never had anybody that was under 18 try to buy. So I don't know what that would be like.
A celebrity.
I don't know. I haven't actually personally experienced that. So I'd have to double check on that one. But
Cool.
yeah.
Wow, good.
Good. That was a great question, actually. And I
You
get
guys
that
were
question.
great. I learned a lot tonight.
Good.
And,
Thank you.
I'm very impressed.
You're really
TJ.
sweet. Thank you, TJ.
No, I
Yeah.
would do business with either one of you guys.
Oh, you're really sweet. Thank you. But any other
TJ.
questions that you can think of?
I'm good.
Okay.
He can message me them.
Okay.
Thank you guys for watching on Zoom,
Thank you.
YouTube Live. I'm gonna tap out now and see if I can record this. I already recorded it. I'm gonna save it.
Oh, good.
Okay.
I forgot about the mic thing. Sorry about that.
No, it's fine.
Right.
It just, I think.